Welcome to the Riskwiser Zone, your premier destination for all things stocks and finance. I'm your host, Lewis, and I'm delighted to have you join me today as we navigate the ever-changing landscape of global markets. As we always say, a wise investor is a risk-aware investor, so let's dive into the top stories making headlines. First off, it seems like China is playing it cool with Denmark regarding sovereignty over Greenland. Chinese Foreign Minister Wang Yi has assured his Danish counterpart that China respects Denmark's territorial integrity, which is music to our ears in terms of international diplomacy. But as we know, geopolitics can be a delicate dance. We'll keep an eye on how this develops and what implications it might have for global trade and stability. Speaking of which, China has also called upon the United States to maintain stability in the international financial system following Moody's downgrade of the U.S. sovereign credit rating. Now, this is where things get interesting. The U.S. debt pile has been a concern for many economists, and such downgrades can have far-reaching consequences. It's a reminder that even the world's largest economies are not immune to fiscal challenges. Meanwhile, back in the mutual fund space, we've seen some strategic shifts by investors towards more defensive stocks and assets, possibly indicating a cautious outlook on the market's future performance. This is something we'll continue to monitor closely, as investor sentiment can be a powerful indicator of where markets might head next. Now, I know what you're thinking. Louis, with all these global tensions and economic uncertainties, how should I position my portfolio? Well, that's a question for the ages, isn't it? The key, as always, is to remain informed but not reactive. It's about striking the right balance between risk and return, diversifying your investments, and keeping a long-term perspective. Before we take a break, let me leave you with a thought. In times of uncertainty, knowledge is power. Stay updated, stay vigilant, and always keep your financial goals in mind. We'll be analyzing these stories further and bringing you expert insights to help you make informed decisions about your investments. We'll be right back with more from the world of stocks and finance on the Riskwiser Zone. Welcome back to the Riskwiser Zone. We're glad you've joined us again as we navigate the complex world of finance and market. In this segment, we'll be exploring a fascinating development in the realm of international trade and commerce. It appears that Chinese companies are increasingly looking to Singapore as a gateway to expand their business operations in Southeast Asia amidst the ongoing trade tensions with the United States. Now, you might be wondering why Singapore and not Hong Kong, which has traditionally been the go-to destination for Chinese companies seeking an offshore market debut. Well, it seems that Beijing's efforts to boost ties with Southeast Asia have encouraged some Chinese firms to increase their presence in the region. And Singapore, with its political stability and neutral stance on geopolitical matters, is proving to be an attractive option. According to reports, several Chinese and Hong Kong companies are planning to list on the Singapore exchange, with some potentially raising around $100 million via primary listing. This could provide a much-needed boost to the SGX, which has been struggling to attract mega listings and bolster trading volumes. But what does this mean for investors and market watchers? Well, it's clear that the trade war between the US and China is having far-reaching consequences, with companies seeking alternative routes to access new markets and diversify their operations. Singapore's equities market, with its relatively conservative investors and stricter listing requirements, may not be the most obvious choice for Chinese tech companies. However, the city-state's efforts to strengthen its IPO market, including a 20% tax rebate for primary listings, could help attract more companies to list on the SGX. As we always say on the Riskwiser Zone, it's essential to stay informed and adapt to changing market conditions. The shifting landscape of international trade and commerce requires investors to be nimble and strategic in their decision-making. So, what can we take away from this story? Perhaps it's that Singapore is poised to play a more significant role as a gateway for Chinese companies expanding into Southeast Asia, and that the SGX could benefit from increased listings and trading activity. As we move forward, it will be interesting to see how this development unfolds and whether Singapore can close the gap with Hong Kong in terms of equity listing. One thing is certain, though: the world of finance is full of surprises, and staying ahead of the curve requires a deep understanding of the complex forces at play. Stay tuned for our final story of the day, right here on the Riskwiser Zone. Welcome back to the Riskwiser Zone. We've had a fantastic conversation so far, and now it's time to wrap up with some insightful analysis from renowned expert Sandip Sabharwal. Today, we're going to dive into his views on various sectors, including cement, EMS, and platform companies. According to Sandip, the cement sector is facing challenges due to muted volume growth and high supply increases, which could lead to pricing pressures. Despite cost control measures, valuations are not cheap, and the sector needs to see significant volume growth to perform well. He also expresses concerns about the EMS space, where companies like Amber Enterprises and Keynes are trading at excessive valuations, making it tough to justify their current prices. Moving on to platform companies like Zomato and Swiggy, Sandip believes that, after initial moves towards profitability, these companies are taking measures that will strain their cash flows and profitability. He questions the allocation of capital, which may lead to higher top-line growth, but also results in significant losses. It's essential to consider Sandip's views when making investment decisions, as he provides a balanced perspective on various sectors. As always, it's crucial to do your own research, consider multiple viewpoints, and assess your risk tolerance before investing. That's all for today's Riskwiser Zone. Remember to like, share, and subscribe. And until next time, invest with caution.